What's going on, Wolfpack Nation? It's the Wolf. This is week 30 trade recaps. If you guys like the content, give us a thumbs up, maybe subscribe. Let's just go ahead and jump right into it. So as mentioned, week 30, this is Monday, 7/26, BTBT. So BTBT is digital asset equity sympathy. And this one, we were a little bit short side aggressive here, working on proper risk sub 650. Actually, we're profitable on this at the money cut, carry, and then the expansion push. Again, we're aggressive, really super aggressive here, only spacing out the re-entry about 40 cents from the prior cut, which is a little tight. Again, attempting again near 8. We eventually stopped out, and asset was fairly strong here, so we tried to flip long. Now we're trying to develop a long strategy here at Wolf Trading, but you can see we have specific levels, and we're not afraid to try to short these levels, and we believe they're inflectious. So if we're not going to get it on the short side, we're going to try to take it on the long side. We were a little bit early, as mentioned, tight risk, but the level did come in and did confirm here, but we were just kind of on the sidelines because we were 3x red on the short side, and then now we're 1x red on the long side, so we kind of just took a break and was watching some tape. Then after hours, it was a nice retracement off highs. I don't remember the percentage, but it was lucrative enough right into higher time frame potential support, and we got in small after hours, and then we just added to a loser, which is not the best scenario here, and we got out small red, but we are red on the short side and red on the long side. So not a great way to start the week. That was Monday. Here's Monday as well. AMC, you can see trade notes on the left-hand side. So AMC, here at 10:15, we're reporting that there's some triple top intraday supply test here. And you can see there was a little bit of aggression here versus the offer. You can see expansion. Look at the volume as well. Acceleration to the upside. So we threw some feelers out, 39.88 and 94. Small, tiny. We just want to get some risk on. Then we want to watch a little bit of tape. And that's what we did. Not trying to, this is a comment at 10:17, not trying to catch this one on 15 cents of risk. Just trying to work alongside the larger players, maybe the institutional algos, and try to trade alongside the larger entities. We wanted to add a little bit higher, I believe, some M1, some 1 minute time frame notes here, back to back 900K plus. It looks like that was right here. So the asset's starting to become in play. Liquidity is there, and we didn't get the ads, but we ended up taking profit here, as you can see on the left side, targeting 50%. 5 minutes later, it comes in, and then we trail risk in the money. We didn't stop out here. It was a nice little expansive swipe versus soft supply here, and then we just took it off on the pull in, and we got flat. That was AMC. Here's SGRP. SGRP was media, 8 million float, like 59-60% insider ownership. We had a short interest here at 376 based off of a 10-year higher time frame decision point. That's a level that we like to short, or we believe these HTF DPs could have the potential to be inflectious. So we like to trade these on both sides, the long and the short side. Predominantly, we're short sellers, but we're trying to put together a long strategy here. So early in the morning, we had eyes on 376. So you can see here at 372, maybe 374, should be over here. Short feelers out, 68, 70, 72. Started to take 15%, added in probably another 10, maybe another 15%. So looks like again, this was Monday. I'm not exactly sure, but I believe I sized in around 50% of our max size. So, and the risk here was 382 sustained bid. So the high of the day here was around 385, 386. But our risk on the short side, so this is our opinion at Wolf Trading, but when we risk a short position, we're risking a specific level that can sustain a bid. So if buyers can hold this level, maybe we see some soaking. It looks like the demand is in control of a specific level, then we believe the chart psychology flips and we just take the trade off. And in this instance, the risk was correct, being that it was at the high. So the risk thesis that we had did hold, and then we see the downside continuation. Now, when we feel like we have a high average versus the competition, so our average in relation to other short sellers is high, maybe among the 95, 96, 97, 98, maybe even 99 percentile on this trade. That these are the positions that we like to maybe hold on for more lower targets. We trail risk at the money, and then we're basically in a risk-free environment, and we just want those low targets. And you can see at 1021, which is I think right around here, we're going for those low targets, all sub 250, and we pulled in. You can see down here at 1229, we're just doing a little RR calculations. So we took off 60% of the position here, and the separation versus our average was $1.36, and the theoretical risk, excuse me, on this trade is 8 cents. So we got a 17-to-1 risk to reward ratio on these covers. That's 60% of the position, and then we had in the money risk aggressive here versus soft supply here at 262. We triggered and we got flat. But even on the in the money risk, that was still 14-to-1. So this is a very high risk to reward ratio trade. And at Wolf Trading, we believe trader longevity equals sustained exposure to high risk reward scenarios. So if we can put ourselves in this position here over and over and over again, that's really what we believe, in our opinion, to be trader longevity. And you can see here, again, I'll just zoom in for the soft supply. When we're looking at soft supply, we're looking at these areas here. If we can see the psychology on the chart flip, and maybe we'll see some demand start to take over, speed of tape, maybe higher lows as well. These are areas where we want to put in the money risk. We want to risk just slightly above supply levels. We don't want to risk at supply or below supply. Obviously above, give it an opportunity to potentially reject. If it doesn't reject, we just cut the trade. So this was a nice trade here as well. That was SGRP, trade notes on the left hand side. Next trade, DYAI. DYAI, this is Tuesday, 7/27. Looks like we just caught opening exhaustion. Really, there was not any volume in pre-market in relation to the opening, so this one just looked like it was pushing, and we caught opening exhaustion, and we were quick to trim in the money risk, and just a short little trade. We like trades like that. TLRY looks like, I don't really remember this one particularly, but this was on 7/27, I believe. Double check that. Yeah, I believe so. Just trying to keep the risk tight on the front side, it looks like, and catching higher the better scenarios, catching the short-term buyer exhaustion, and then just trimming out. Looks like we caught it in series of 2 and unwinded the position. BVXV Pharmaceuticals, 14 million float, 30% insider ownership. You can see here on the right hand side at 8:27 in the morning, assets trading right around here. We're reporting that we're watching 409, and it looks like that's where we got in, right around, here's 410, just right around that level. And theoretical risk on this trade is about 12 cents. We waited for the breakdown, 50% targets at 362 and 56 at 934. It only took about a minute or two for those passive targets to fill, and then just nice unwind here. More take. Lotto's out at 308. We wanted a lotto here. We didn't get it. Looks like we carried some over, or maybe trimmed before the bell, before 8 o'clock. I'm not sure on that. FLGC, this one was in play. It was nice. It was nice. I remember this one briefly. 31 million float. We were watching $6 originally down here. We didn't take that trade. Here's the trade notes on the left. We threw some feelers out. First entries at 680s, 690s, small, and the trade started to work a little bit. You can see some competition on the bid versus maybe prior shorts here, maybe a triple top swipe. So this is what interests us here. We thought that there was the liquidity was in play, so we got in. We stopped out. It pushed up again. Now this was interesting here. This was when it tested $8. So here's a slide from the technical room. So this is, at the time, this was the higher consolidation of the day. So whatever consolidation is the high of day consolidation, we just relabel that as tier 1. tier 2 and tier 3 and so forth. So at the current time, this was a tier 1 consolidation, and it looked like just looked trappy, right? Like you can see they're selling. They have the offer. The offer is strong, and they're just washing out. Maybe they're trying to entice emotional downtick or shorts to try to slam lows here, and then it just comes right back up. It's forming a nice little trend line here, but we didn't want to trade this. An NTZ is a no trade zone. Short interest at 888, and this was at 228, right around here. So we stayed away from it. And then it came up, and we did fill here. Now, this was towards the end of the day. I wasn't at the desk, but we wanted to add here around 10, but I got the alert that I filled on my phone, and I came back in the office. I pulled these orders out, and we tried to catch a lower high here around 9.8. So we had orders in this area here, which we didn't catch. So we didn't fill the scale. So in that instance, I want to take off some risk at the money. And then if it comes up, I want to reload higher for price improvement, but we didn't get the high. So then I just unwinded the position on the way down. Looks like we caught some fills in the after hours too as well. That was FLGC. This was a little crowded play. There was a lot of eyes on this. I remember that. BTBT, back to BTBT again, digital asset, equity sympathy play. Here's the trade notes on the left. Basically, this trade was great because not the average in relation to the theoretical risk at highs, but the trim and trail technology. So basically, we were taking profit and we were trimming and trailing. So let's just pull that here. So when we take profit and then we trail risk down above soft supply. It's just a process, just repetitive trim and trail. Again, taking more profit here, and then we're trailing risk based off of, I don't have the volume. I can't see where the volume is. I'm just using, obviously, the 1 minute chart here. But these are areas where we believe there to be supply. It's soft. It's not high a day. It's just it's soft supply. And again, trimming more. We trailed risk down aggressively here using prior liquidity. And as mentioned earlier, we don't place our in-the-money risk below or at soft supply levels. We want to give those levels the opportunity to correctly act, and maybe they will reject or not. These are areas where we're watching tape. If it does reject, fantastic. If we find that the chart psychology flips and the bid is holding, then we just exit the trade. And that's what we did here. So this is in-the-money risk, trim and trail. And that's how we like to protect the unrealized column against these algos. We look at the chart as real estate. So once we conquer this part of the chart, we don't want to be susceptible to give any of this back. So we trim and trail. And that was BTBT. BTBT was in play pretty much a few days last week, which was nice. So hopefully we'll have eyes on that this week. APT, this one was just not really a high or low machine. There was some nice range here, but it was bullish all day. We weren't really too interested in it. There wasn't that much liquidity as well, but at 205, we mentioned that there was a swipe. So it looked like high day swipe, maybe right here, but it was thin. But we were looking at 1230 versus historical liquidity deposits. That's where we believe there to be potential resistance. So we use historical liquidity to predict areas of potential support and resistance, and then we use leading data such as tape, level 2, time and sales, etc., to confirm the thesis. But we like these levels because we can get in and out, confirm or deny the trade thesis on 10, 15, 20 cents of risk, and that offers the potential for higher risk to reward scenarios. So here we had eyes on 12.3, and this area did act as resistance on this particular instance. AMC. I mean, it's bearish. GME has been thin for weeks now. It's, in my opinion, an illiquid product, especially on the options side. But we have eyes on this every day. It's on radar. Here's the trade notes. Not an exceptional amount of range here, but we were catching passive fills here and then just trimming off, catching passive fills, trimming off. You can see we trimmed risk down in the money. Final targets 38.27. This was at 10.23. We reported this right around this fill. So when we filled here, we're acknowledging that here's our final target, and in the money risk is aggressive at 38.52. Just sit on hands. That means sit on hands means we're the upside is the upside has we have orders out to monitor upside risk, and we have targets down below to take profit. So when we have the upside and the downside covered, then we don't need to do anything. We just sit on hands, and generally that's what we mean by sit on hands, not doing anything. No more pushing buttons. Tesla. So Tesla, we haven't seen this much strength out of Tesla in a while. So we took some short attempts here, and again, also too, we haven't had a upper 690s print. We had one a few weeks ago in the extended hour in the morning in the pre-market, but we haven't had a 699 or 698 open market test in a while, a few months, I believe. So this was something of interest. And we took some short attempts on it on tight risk, and 3 and done as mentioned here. And then congratulations to the bulls. This was a great congratulations. This was a great long if you caught it. Plenty of liquid on that. AHPI. This was an interesting one. Doesn't look too special on the chart, but I remember watching it throughout the day. A lot of emotions. I mean, it did go from 6 to 10, so it was a nice vehicle. Here's all the trade notes on it. We were patient. We wanted short feelers at 980. We wanted these levels here. We weren't interested. We had feelers here, I believe. They miss, so we didn't touch it. It came back. We filled. Now I remember in the room, some other traders were getting short as well. And we caught this one very nice. So at 11:43, we said, we're looking at 10:14 and 10:18 at 11:43, which is like right around here, I think. And we filled passively. And when it came down, we got a little emotional. It did look bullish here. So instead of taking profit making any adjustments to the targeting, if I get emotional, we can just be more aggressive with the risk, right? It's always, you can't, if the risk is tight, you live forever. So again, that's just an opinion, but we want to shrink the risk. And we trailed risk from at the money down in the money, and that false breakout candle right here got us. But risk was good. This was a good trade. We would take this exact trade over 1,000 samples. We believe that this is operator advantageous. So we would take this exact same setup again and trade the same way. Give us 1,000 more opportunities to trade this exact same setup here. We'll take it. EYRP. EYRP, this is the last trade on Friday that we took of the week. It was level up halt fest at the bell. These algos are getting, it's not even on Amex. It's coming over. I don't know if this is a NASDAQ ticker or not, but we're starting to see the manipulators play around with the halt bands. You can't really trust as much the imbalance data. So this was like level up halt into, I believe, another level up halt, or I think it halted twice here. Again, this was a couple days ago, but we scaled it. So we had a 3-tier scale, just at 9, I think 9 4s, and then we wanted some, if they swipe 10, we would put the larger ad and final ad, risking a 10.26 or a 10.32 sustained bid. We took some profit off fairly early here, and then we just unwinded it. Again, this is an example of trim and trail. As when we take profit, we trail risk down, the asset breaks down, we trail again, and we just try to protect the unrealized column. All right, guys, thanks for hanging with us. That was week 30 trade recap. Also, if you guys are interested, we do have Wolf Trading Discord server here. Here's the Wolf Coaching video library. We have some members only videos, as well as we try to keep this constant and up to date. We're constantly adding videos. We have a technical room as well. Here's that FLGC Tier 1 no trade zone in real time where we're looking for 888, 894. We like to look, we track the algo. So we have algo economics. We're looking at, areas of low liquidity or no trade zones. We have the runner's room. The runner's room is where we add the in-play assets. And this room goes back until February 20th, 2019. So we have a lot of information logged in here as well. But if you guys are interested, just shoot me a message. The details will be below. All right. Thanks a lot, guys. Everyone have a great day. And thanks for hanging out. And let's have a great week next week. Thank you.